So I'm sure someone is asking, what is this wealth tax that you
Yes.
keep on talking about? So let's do a little bit of an introduction here.
Yes.
And let's go back to the basics. What exactly is wealth tax? And how different is it from the income tax, the value added tax, and all these other taxes that people are very familiar with? What is this wealth tax?
Wealth tax is completely different from income tax and VAT tax, because wealth taxation targets the very high wealthy, and it targets their assets. Yeah. So there's a complete difference between assets and income. So income is what you get from a certain activity that you do. For instance, if I sell to you, what can I use? Bread. Let me use bread. So if I sell to you bread at 50 shillings, maybe 40 shillings will go to production, and then 10 shillings will come back to me. So that's part of income that I'm generating from businesses. For instance, if you are employed, there's also the income that you get at the end of the month. So that's just money that you get from a certain activity, economic activities that you do. However, when you talk about wealth taxation, we are targeting the assets by themselves. So wealth is not measured particularly by the income that you have, but it's measured by the assets that you own. And these assets include both tangible assets and intangible assets, movable assets, and also immovable assets. So when you're talking about taxation, what wealth taxation, then what we'll do is that we will do an accumulation of all those assets, and then we will give you a certain wealth value. Then from that particular wealth value, then we will put a particular rate. That is the net wealth tax in that particular regard, where we'll just take your total value as Miriam. Let me give an example with you. The houses you own, the vehicles that you own, the art paintings that you own to that extent, the jewelry that you own, and then we'll compute that. Then we'll deduct some liabilities that may arise from the same, and then we will establish your net worth. Then once you establish that net worth, we'll put a rate on it. Then once you've put a rate on it, then that becomes a net wealth tax. Then the other one is a wealth tax based on transfer, which also still targets wealth, whereby, for instance, when you're transferring wealth from one person to another, for instance, through sale, through inheritance, through gifting, then we can put a taxation in terms of the value of that transfer. Yeah. So in Kenya, we have practically the second part in terms of the transfer taxes. For instance, when you look at capital gains tax, when you're transferring movable and immovable property, including shares, etc., or land in this case, or buildings. So in that particular circumstance, you pay CGT, that is capital gains tax, at the rate of 15%, which you can say is part of wealth taxation in this context.
You mentioned that, when calculating the wealth tax, there are some liabilities that can be exempted.
Yes.
What are some of these liabilities? Because I'm thinking there's a wealthy Kenyan somewhere now thinking, well, they're about to come for what I'm worth. So what are some of these
Absolutely.
liabilities?
So some of the liabilities include debt. So for instance, one way or another, you may have debt. So that one will tend to deduct it. For instance, you might have also paid other taxes regarding that particular property, so that we can also reduce the double taxation element. So for instance, when you think about property in this case, perhaps you had paid CGT, stamp duty, etc., and therefore we would need to deduct the same when we are calculating the value of that property. So these are some of the liabilities that we're talking about.
So from an inequality lens, why is wealth tax often seen as a tool for redistribution as opposed to punishment? Because someone would be thinking, why would you want to tax me for being wealthy? So why would we view it as, a redistribution as opposed to punishment?
When you think about wealth taxation, it's a measure of we are taxing the wealthy so that we can be able to redistribute the wealth inequality. Now, the redistribution of this wealth inequality doesn't mean that we're going to take the money from the wealthy and then dish out the money to the people who are coming from disadvantaged backgrounds. That's not what you're going to do. So when you think about it, Spain has something they call the solidarity wealth tax. So what they do is that the wealth taxation is raised, but that particular taxation is pegged or is earmarked for a certain activity. So we can have a wealth tax, but that wealth tax can be earmarked for a certain social infrastructure or public amenity, or realizing a certain socioeconomic right.
Yeah.
So, for instance, the revenues that are I beg your pardon, the revenues that are collected annually can be put together, and they can be used, for instance, to build a school, to build a hospital, to ensure that they finance social health, to ensure that they finance a particular activity that would alleviate some burden on the people from the lower disadvantaged areas, so that once that burden is alleviated, then they can be able to focus their time and their energy on all the strength that they have toward now building the economy. But if we do not have then that particular funding that is now going to be allocated to that, and putting stress on the mind of the Kenyan in terms of health, education, etc., then they will not be able to contribute meaningfully to the economy. Yeah.
So we are saying that this wealth tax can actually be used in the delivery of public services.
Yes.
So that the person living in maybe a poor household doesn't have to think about where to get to pay, for health care, or for, the children to go to school. And I think, well, let's see if the government is ready.
Yes.
And let's switch gears a little bit and look at the global lessons and also the reality check. So in your paper,
yes,
you note that there are some OECD countries that have rolled back or failed to implement wealth taxes.
Yes.
Why is this the case, and what lessons can Kenya, borrow from the experiences of those other countries in the implementation of the wealth tax?
Thank you. Now, taxing wealth it's as easy as it sounds, but it's also hard in terms of its implementation and its enforceability in this particular regard. And when you think about it, the wealthy people have a lot of access to a lot of power. Let's begin there. And also, they have resources that can enable them to be able to hold offshore wealth and also structure their wealth in such a way that you will not even be able to identify whether a person is wealthy. So, for instance, when you were disseminating this particular paper, we would ask ourselves, for instance, the conversation that always goes on in the world, and I know you've had this from maybe Trevor Noah when he's talking about Elon Musk, and he's asking, how can you tell that Elon Musk owns X? How can you tell that Elon Musk owns Tesla unless he comes out and tells you he owns? But on paper, you can actually see that he's not the one who owns it in that context. So the taxation of wealth is complex in itself, and especially for governments who do not have the enforceability mechanisms, then it can become a very tall order. And this is something, for instance, that has been seen in various OECD countries. As the paper says, it's only for out of the 12 who have only now retained the wealth taxes. And then also when you look at it from countries who have implemented, who are in the global south, for instance, when you think about India, it also tried to implement a wealth tax, but also later decided to abandon it because of the cost that it had on matters to do with enforceability. Because it's not as simple as, taking someone's salary, which you can hold an employer accountable for the same, or matters to do with VAT, where you can hold the supplier accountable for that. It's a wealthy person, and at times they hold their assets in different ways. They may hold them through offshore accounts, they may hold them through opaque assets, they may hold them through other persons in that context, and therefore it becomes very difficult to hold them enforceable. And this aspect has made very many countries to shun away from wealth taxes by themselves. And also the aspect of inequality, depending on how you'd like to see the divide. An interesting judgment that I'd ask also the viewers to read is the Netherlands Christmas judgment. So in that Netherlands Christmas judgment, the design and the structure of the Dutch wealth tax, that is in Netherlands, had some aspect where it was looking at the deemed flat return rate. And in that particular context, the wealthy were able to argue, because also they have access to, the best lawyers and the best law firms in this world who can advise them in that context. And they were able to throw out some aspects of their wealth tax because of the aspect of deemed flat rate return, which was seen to be posing some aspect of inequality. And the argument was simply because that, you cannot say that my asset will have generated this particular amount of money by the end of the year. So we cannot say that you're certain in that regard. And because you're taxing something that is not there, then in that context, it can be inequitable. And they carried the day in that judgment, and the tax was declared to be inequitable. Other examples also, when you look at other countries, there's a question of political power, especially when we come closer to the countries in the global south, and particularly Africa. In our paper, we highlight various instances. For instance, when you look at Nigeria, and some of the papers that we have referenced within our work point out that the aspect of using tax deals as a method of gaining political power, and also the fact that many people within the political space are considered to be the wealthy persons who actually shape policy day in, day out. So you can imagine telling the person who is shaping policy to add more tax on themselves. So again, it becomes very difficult in that context, and that's why most countries tend to shun it. But despite all those setbacks that may be brought out within the wealth tax debate, there's also the other aspect, where we are seeing, for instance, through the 2024 World Economic Forum, we had the wealthy people write a letter where they said, they were proud to pay more, and they were asking the leaders at the World Economic Forum in 2024 to contribute to actually put in policies that are going to target them more, and go ahead and so that the wealthy can go ahead and pay more. And that's why I've been asking this particular question, whether Africans, the wealthy Africans, if you are listening to us, whether you would actually write that letter and say that you are proud to pay more. And also in that particular context, we've also seen a lot of action from civil society and also from scholars urging or calling for wealth taxation to be introduced again as a measure, especially to address the widening inequality that is coming up at a very, very high level. And if it's not addressed in this regard, then we will have the image or the painting that I had described earlier, where we have some certain amenities that are only accessible for the wealthy, but not accessible for people from humble backgrounds.
So before we continue, and before we, dive deeper into this conversation, let's pause for a minute and do, a fact or myth segment. And think of this as a reality check about some of the common beliefs that we do here in public, or we ourselves hold and have held, before we knew any better. So the first one, so for any statement that I will tell you, you'll either tell me whether it's a fact or a myth, and you'll tell me why. Okay. So the first one, wealth tax means taxing salaries more.
That's a myth. It's not a fact. As I began by saying, when you look at this, wealth taxation is just based on the assets. So in our paper, we recommend starting from the dollar millionaires, the $70 to $100 millionaires. So that's roughly 129 million shillings. So are you within the bracket of 129 million shillings in terms of your assets? If you are, if your salary is, no. But if your assets are, then yes.
Take note of that. The second statement, only the ultra wealthy could be affected by a well-designed wealth tax.
Absolutely, that's a fact. It's only the ultra wealthy, and that's why the threshold should actually be very, very high, so that if you just have 100,000 shillings, it doesn't mean that you're wealthy. So we wouldn't be targeting you. So that's a fact. We just want the high net worths. So net worths, I mean. So in this context, above 129 million shillings. So if you're above there in terms of your assets, then this tax is for you.
You're breaking our heart. Some of us think you're wealthy.
No.
But good to note, the high wealthy, the ultra wealthy, take note of that as well. The next statement, wealth taxes always fail.
I'd say okay, that's a little bit hard. I don't know whether it's between a myth or a fact, but I'd say it's a fact. No. It's a myth, half myth and a half fact. Because the aspect is, again, I'm a lawyer, so the words always fails. So the word is no. It doesn't always fail. However, if done wrongly, then it will fail.
Yeah.
And those are some of the recommendations that we're speaking about in our paper, which I think we'll address as we continue with the podcast.
Yes, please.
Yeah.
The next statement, the middle class would pay the highest price of a wealth tax.
That's a me. Again,
Most
as I
of us,
said.
most of us feel like we belong.
No, 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 no. No, no. The wealthy is 129 million and above.
Okay.
Yes. In terms of assets, not even matters
Not
to do
in
with
money.
income.
Okay.
Yeah.
The rich can easily avoid wealth taxes by hiding money offshore.
That's a fact. That's a very, very big fact, and they can easily hide the same. We have very many scandals that we've had about Pandora Papers. We've also had very many scandals about certain tax havens. So it's very, very easy in terms of how they are, they have the resources towards, being advised on how to structure their wealth in such a way that it will reduce their tax liability.
Okay.
Yeah.
The last one. Wealth taxes can help fund public services like healthcare and education.
Yes, that's a fact. If we actually take it in terms of, the solidarity tax, when you look at it from the aspects of Spain. However, we also need to put a caveat that those particular monies that are raised should not end up, in corrupt activities where, we hear scandals, etc. But we should implement them. If we earmark them that this is for education, it should actually go for education, and then the wealth tax will be able to have its redistributive effect.
Okay.
Yes.
Thank you.